So we are live. Welcome everybody to Mortgage Monday. Of course we have Eric with us.
How you doing?
We couldn't have a Mortgage Monday without Eric. So
Well, you could. It's just not going to be very informative.
So then we can't have a Mortgage Monday without Eric. Gotta be informative. So we today is buying while young and single. So this is really cool because I know somebody who bought young and single. So they will be joining us by video. They sent us a video. So we'll be able to so I'm going to let's see if we can start with watching the video because it's like a minute long.
Sure.
And then we'll go into you saying how this actually can happen. So let's and then so we'll start a little backwards this time, but that might be better for us. Let's see. If I can get her, yeah. Yeah, I can get that. So we'll share her. And then Eric, you let me know if you can hear her. Can you see that, Eric? All right.
It says you're starting sharing screen. There we go.
So you can see that, all right?
I can.
Okay, one moment. Let's so we have her. So we're a little delayed, but that's okay. So I apologize for being delayed, everybody. I was trying to wait on my video submission. And she was doing double duty. She's preparing to meet with her mentor teacher today because she will be teaching kindergarten in the fall. So she's going ahead and getting started. So we're going to start with her video and then we'll go from there.
So renting was something that I did look into initially just because it's more fluid and in general that does work for younger people. Because we don't always want to live in one place forever. However, when I noticed how much rent was, I did get a little discouraged. And so my mother suggested that, I just buy a house. And so when I started looking into it, I was like, whoa. You pay twice as much to live in an apartment that barely has 2 bedrooms, but I live in a townhome and I own it, and my mortgage isn't even $700 a month. So owning in that aspect is much better because who wants to throw their money away? Now, please be advised, if you're going to purchase a home, please make sure that it is completely upgraded because you will be responsible for any repairs. But outside of that, owning a home is just better for you financially.
All righty. So if you were not aware, that is my oldest child. And she has decided that renting was not a good idea for her. She decided that at the very beginning of everything, honestly, that renting was just not the deal for her. It just didn't make sense to her. So she bought a home at 20. And this is what we are bringing Eric in now. So he can tell us how that's even possible. So she was 20 years old, and she decided that, you know what, I'm not going to go into the rent trap. So for those who have children that are in college, getting out of college, not necessarily in college at all, but have been working all throughout high school, they've graduated high school now. They have a decent credit score. What would you say, Eric, in this day and time?
Well, we'll start with the first questions, and kind of go down through those, because those are going to cover a lot of what you just said, and your daughter said it very well. I'm tired of throwing money away, because that's what you're doing. So are there benefits to buying a home while single? A lot of people think or contemplate, should I really buy a home while I'm single, or should I wait until I have a spouse or a significant other or whatever and buy it together? But there's still definite benefits to buying a home regardless how many people are qualifying for the home purchase. When you purchase a home, the payments that you make monthly builds the equity in your home. Well, what is equity? Equity is the difference between how much your home is worth and how much you owe on your mortgage. So if you owe $200,000 on your mortgage and your home's worth $400,000, then that means you have $200,000 worth of equity in there that you can pull out in multiple ways. You can use the equity to buy or put into a new home once you sell your current home. You can try for a cash out transaction or a cash out refi. Take out a second mortgage on your home loan and use this money for many different reasons, including consolidating debt, upgrading your home. If you have bills to pay, sometimes it will lower your monthly costs. But that's equity you would not have if you are renting, period. Homes over time have always appreciated year after year, which builds you even more equity. So not only are you paying money towards your home and paying that mortgage down, your home's also increasing in value. Probably one of the best investments you'll ever have. And the more equity that you have, the more that more wealth you're building for yourself as you change and your lifestyle changes. You maybe have a family, you want to buy a bigger home. Well, great. You've been paying on this home, it's increased in value. Now you can take that equity and go buy another home with it. So yes, buying a home when you're single has many benefits to your financial future, which is what it really comes down to. Do we have any questions on that?
Sorry, I muted myself.
Okay.
No, we don't have any questions as of yet.
Okay. All right. Well, we'll move on to the next question. Do lenders frown on single people buying homes? So that's kind of a myth. There's a lot of myths when it comes to buying a home, but I'm going to have a hard time buying a home just because I'm single and I don't have dual incomes. No, that's not really the case. Lenders don't frown on single borrowers. However, it can be considered a file with more risk for an approval if there's not a co-borrower on some of the files in some cases. Depending on your credit score, credit history, your income, how much down payment you're putting down, a co-borrower may very well help you receive an approval on a file instead of denial. So if you've got a lower credit score, credit history is a little rough, maybe not the best income or work history, and you're doing a minimum down payment, if you have someone that comes on with a higher credit score, makes more money, things like that, that can be a co-borrower, non-occupant co-borrower, someone that doesn't even live in the home. I've seen that go from a denial to an approval, because that's, in most cases, a co-borrower will help strengthen the file and lower the risk scores, because there's a risk score analysis that they put on a lot of files. And if they've got the better credit, they've got the better score than the main borrower, the odds are you're more likely to get an approval. In many cases, though, a single borrower can qualify a purchase approval on their own and would only need a co-borrower if they needed to get a higher purchase price approval, as their income, the main borrower, would not be enough to support that value. So that I run into that a lot of, hey, you can only afford, based upon your income, 200,000, but you're looking at 300,000. Let's bring on a co-borrower, non-occupant co-borrower, to help your debt to income ratio, help lower that so that you can buy more of a home. But bottom line is, don't assume that you can't qualify for a purchase on your own home. Just give it a shot if you're looking to buy instead of rent, because rent right now is costing at or more than what a home purchase could be. And if you're thinking about purchasing, give me a call. Let's have a conversation. Let's see where you're at. Let's do a credit review if you want to go that route, and see if we can't get you into a home instead of renting kind of situation. Do we have any questions on that one, Nikki?
We do. The question, one of the questions that we have is, I was told, and I think you just covered this, but I was told that single women are more of a risk than a single man to a lender.
That is absolutely not true. That would fall under credit discrimination, and that's not the case at all. We when I'm taking an application, it doesn't make a difference either which way, and they don't really have a monitoring system for that in place to even kind of check it. I mean, they do have a spot for it, but when they run it through the what's called an automated underwriting system, that's not really taken into consideration. That's another reason why we can't ask, do you plan on getting pregnant over the next year? Things like that. It's definitely not part of it. So no, we don't look at that as being risky or not risk. It's based upon your credit score, your credit history, type of income history, your work history, how much money you've saved up, asset wise. These are all things that they look at as far as what is considered risk.
We have another question. What is the credit score, the ideal credit score to purchase a home?
And we are going to get into that with our next question.
Yes.
Are there any other questions?
No, that was it. So that
Okay.
leads right to our next question.
Right into the next question. So very good question. What does my credit score need to be to buy a home as a single person? Well, whether you're purchasing a home or you're not, you always want to monitor your credit scores and what's being unreported with your credit reports. This is extraordinarily important in anything that you go to do that you have to finance. 9 times out of 10, even renting a home, they're going to want to see that you have a certain credit score. So you want to try to keep your credit score as high as you possibly can. And don't get me wrong, I understand things happen in life. They do. There are hurdles that life throws at us, some speed bumps, and that can affect our credit. I mean, God knows I've been through stuff like that too. But if that does happen, you want to try to rebound and figure out how to rebound from those hurdles so that you can get your credit scores back up. So you want to try to keep your credit scores as high as possible. But credit scores and credit history are very important when you're purchasing a home. And when you're purchasing the home, you really need to consider that one of the first steps on a home loan approval. First thing they're going to do is we're going to have a conversation, but then we're going to go into credit. Let's see where your credit scores are. They're going to pull all 3 scores. So Equifax, TransUnion, and Experian. And they're going to take the middle score of those 3. And it doesn't matter which one it is, whichever one's the middle is what they'll take. There are multiple websites that allow you to check your credit scores for free, and you can check each of your own 3 credit bureaus once a year for free at annualcreditreport.com. That's annualcreditreport.com. They may ask you some security questions, but they should not ask you for a credit card or anything like that. And you can pull each bureau once for free just to see what's on there. So that annualcreditreport.com is not going to tell you your scores. It's just going to tell you what's on each one of those credit reports, the credit bureaus, the liabilities, any derogatory credits. Always want to keep an eye on that. And then other websites will allow you to get your credit scores sometimes for free, sometimes you pay for them. It depends on the website. You want to make sure your credit score is high as it can be. When you purchase a home, so that you can try to get the best home loan possible, and usually the cheapest rates or mortgage insurance. But please understand, you do not need your credit score to be in the high 700s or 700s to get approved for a home loan. To answer your question, most lenders in the marketplace require a middle score out of the 3 bureaus to be a minimum of a 620. However, here at Southeast Mortgage, this is where I work, it's possible to have a middle score of a 580, in which we will evaluate the individual situation to see if we can't get them a purchase approval. So if you have any questions on that, if you have questions about your credit, feel free to give me a call and we can have a discussion about it. And if you want to have a credit review done, I can do that as well. If we're looking to purchase a home, so that we can see where we're at. And you may not be ready to purchase a home just yet. We may need to do a little credit, try to fix the credit or get it into a better position as best as we can, so that you can buy a home at a later point in time. Any questions on that one?
No, that wasn't that you answered the question. All the questions were what about this score? So you already covered that.
Yeah. So again, if you have any questions about your credit, give me a call. Let's do a credit review and see where we're at. All right. So this one's a really interesting question. Is renting really that bad? So renting has its pros and cons. In my personal opinion, unless you are moving around a lot, and even then you can sometimes rent out your home, but if you're moving and you don't know where you're going to live and stuff like that, that may give you a little bit more of the availability of picking up and leaving and not having to deal with selling a home or things like that. Renting is also less maintenance or stress on a individual, because if something breaks in the home, you're usually not responsible for it. It's the landlord's responsibility to fix it, air conditioners, garbage disposal, stuff like that. But that's if you don't have an absentee landlord. You got an absentee landlord that want to fix stuff. Now you got a nightmare on your hands. So in my personal opinion, renting, and if you have to rent, fine. Your own situation. But here's the thing. The one thing you will never build is equity in the home that you are renting. Each month, when you are paying your rent, you're helping the other person or company that owns that property build their wealth and equity, not yours. And you're basically paying that for them. Essentially, you're throwing your money out the window, as paying rent is not going towards increasing your overall asset base. It's just not. You're helping someone else increase their wealth. When you rent your when you rent your home, or when you rent, your monthly payment will most likely increase each year you live in the home. So if any of you have rented for multiple years, okay, it's going to go up. What is it going to be? $100 this time? $200? Over the last couple of years, the amount of rent increase we've seen, I've seen some people's rent go up $500 a month. I think one of my friends, if I'm not mistaken, it went up close to $750 to $1,000 a month. It was really getting insane, but they can get it, and they know they can get it. And if you don't want to pay it, guess what? You got to find a new place to live. That's not something I'm interested in. I'm just not. Purchasing a home, in most cases, your monthly mortgage payment will be fixed and is not going to change, provided your property taxes, homeowners insurance don't increase at the end of the year if you escrow those into your monthly payment. So 9 times out of 10, you're going to get a fixed mortgage, and that mortgage payment is going to stay the same for the most part. Now, we all know taxes and insurance, stuff like that, goes up. And when it does, then we have to change the mortgage payment some, but that's not, it doesn't change. You want to talk about rent, you want to talk about owning your own home, and at least you're getting the equity out of it. When you rent, it is a very real possibility at any time the owner of the property can decide to sell the property, which means you now have to find a new place to live. And usually they only give you a very short time period to move. Some give you 30 days, some give you 60. It depends on how nice your landlord is. But now you're forced to uproot your family to a new location. And I know for me, that can be very stressful in many ways. I can't stand moving. But when you rent, you don't know when that's going to happen. You just don't. When you purchase a home, you can stay in the home indefinitely unless you don't pay your mortgage. It's pretty much a cut and dry up. Keep in mind that the home that you rent is not yours, so you can't make it your own, and nor should you put money into a home that you don't own. So you want to go put in hardwood floors because they're carpet. Not your home. I want to knock down this wall because I want a bigger living arrangement. Nope, not your home. I want to fix the outside and make the yard this, that, and the other, plant this, put up a fence. You're putting thousands of dollars into a home that's not yours, and you'll never get that back out. So just keep that in mind. It's not your home. Again, a pro for renting is that you're normally not responsible for fixing things that break in the home. But again, you can get back in that absentee landlord, which I've dealt with in the past, and trying to get them to come take care of things so that you can live your life in your home can be a real nightmare. So overall, most living situations, it would be much better to buy than to rent. In just period. It's one of those things that if you're going to start your way to generational style wealth, I guess I would put it, you got to start by buying a home, and that's where that will usually never stop. You'll buy a home, live in that home, maybe sell that home or rent that home out and go buy another home. Now you got another house making you money. So yeah, if you can get out of the rent situation, if you don't have that type of situation where you're constantly moving around, buying a home is usually the best way to go. Any questions on that?
No, we don't have any questions on that.
Okay. All right.
Statement. My daughter sent a statement. She said, when you're renting, you are paying somebody else's mortgage.
Yes. In fact, not only paying their mortgage, you could also be paying the rental's mortgage and their mortgage at their house that they're living in. I'd much rather be putting that money towards my house, my equity, my mortgage. But all right. So last question. Is there a way to buy a property that is both a home and an investment? Yes. This is an option that many first-time home buyers consider when they're purchasing their first home. There are homes that are considered multifamily homes, duplex, triplex, quadruplexes. The maximum amount of units for residential home purchase is 4. Any more than that is going to be considered a commercial purchase, which I don't do. We're strictly a residential mortgage loan company. These types of home can be purchased as a primary residence as long as you agree to live in one of the units as your primary home. And it also lets you rent out the other parts of the home to gain rental income. So if you're in a duplex, you rent out 1, triplex, you rent out 2, so on and so forth. And then that income that you're deriving from that can not only pay your mortgage, but you can also put that money into your savings. So yeah, that can be very beneficial to the homeowner. Rent you receive from the other units can not only pay for the entire mortgage, but also allows you to build your savings if the income received is above the mortgage payment, utilities, whatever you're paying for. So it can benefit you multiple ways and provide you a place to live. These types of homes can be purchased under many different types of loan products, including FHA. For you got the lower credit scores, we can still kind of work on that to try to get you into a home if you want to do the multi-unit type situation. There are different types of underwriting guidelines that apply when you purchase a home that has more than one unit, depending on the loan program. So if that's something you're thinking about, maybe you're possibly interested in, feel free to call me. And let's have a discussion on what type of home that you're looking to do, duplex, triplex, quadplex, whatever, and what type of loan product that would fit into for your particular situation. And then we can get more detailed on what type of guidelines are going to be required for that type of home purchase. But yeah, as far as the bottom line is, if you have to rent, I get it, but basically make yourself a savings account on your own, which is your house. And in a very rare situation, 2008, we saw the crash, but that was a blip. It was a very rare situation that's going to happen with the housing industry. And then it came back tenfold. And now the home prices they're up there. They're up there, but they're going to continue to rise. They're not going to go back down. It's just part of it. So build your wealth, build your equity, start with purchasing a home, get out of the rent trap, and go from there. What other questions do we have? Nikki?
We have a question here. Actually, okay, this one's long, so let me read it. It's so I want to buy my own home. My boyfriend wants to buy his home, but at some point in time, we will probably get married. Our families are telling us to wait and buy together. But a friend of mine said it would be better for us to buy separately and then rent the homes that we purchase out and buy a house together once we finally get married. What do you think?
Excellent question. Okay, so that's a very good possibility. And that can start your pathway down home ownership and equity. Because as soon as you buy that home, you're going to start building equity. So if you buy your home, he buys his home, and y'all either decide to live together in one home, that doesn't necessarily mean that you've got to sell that one. You could live in this house together and then turn that one into a rental at some point in time. Now you do have to agree that you're going to live in these homes for a certain amount of time. It's anywhere 6 months to a year. As your primary residence. But after that point in time, if y'all decide to combine homes into one, then great, rent out the other home. That way you don't have to buy another house. You're just combining you're combining a family into one. You want to buy another home that is now a primary residence for both of you and rent out both homes, then you can try to do that too. But keep in mind, when you go to buy that new home, these two other homes are going to be on your credit report. And those mortgage payments, taxes, insurance, all that stuff that goes along with it are going to go into your debt to income ratios, which means that's going to come out of how much money you could possibly buy a home for. May not affect you that much. It may prevent you from actually buying a home together. So now at that point in time, you're going to need to sell one of those homes, maybe both, so that you can qualify for a home together, depending on how much it is and what you're looking to buy. So it's an excellent idea. I would definitely suggest going that route instead of waiting. But I mean, either which way, 9 times out of 10, you're going to be able to sell those homes and make some sort of profit, depending on how long you're planning on living those homes. Or you both buy a home on your own and then rent out one and live together in this home. And now you're making rental income on this home that you're rented out. So there's a couple of different options that you can kind of pick and choose. The end result of you living together is one thing. The end result of you buying a home together, a separate third entity from the two that you've already purchased on your own, that might be a little bit more difficult because I don't know what those mortgage payments would be on each one of those homes and how much income you both will be making when you go to purchase that home. Again, may work out fine. Maybe that you have to sell one of the homes or both the homes and to buy the house that you really want to live in together. So I hope that answered that question.
We have another question. It's a kind of combo question. How soon can you start pulling equity out of your home? Is your credit a factor? And what is the process of getting equity out of your home? And do you suggest HELOC versus ready cash out, and why?
Okay. So first part, when you're doing a cash out, or let's start with a cash out refi, when can you pull equity out? Each program kind of has their own little bit and piece on when you can pull equity out. The other thing you have to take into consideration is how long have you owned the home? Because when you buy that home, you're basically starting fresh at, I don't want to say zero equity, but you're right there at it. You're going to be building from that point. So how much equity you're going to have depends on how much money you're putting towards your mortgage payment over however many months you've been paying, and has your property value increased over the next 6 months to a year, and so on and so forth. But in most cases, like a cash out refinance, you can only borrow up to 80% of the home's value. So let's say the home's worth 100,000, they're only going to let you do a max loan amount of 80,000. That's going to take you a little time to get that much equity up and into your home in most cases. So the question of how quickly can you, with a conventional loan, there's not really a waiting period. With FHA, to do a cash out loan, it's 12 months. You have to be on title for at least 12 months or 12 months worth of payments made before you can actually do a cash out loan. And there's a couple of other options on that as well. But between a HELOC and a cash out refinance, that one's a long question to answer, because there's so much that goes into a home equity line of credit and the details and whatnot. I will tell you, I refinance more people out of home equity lines of credit. We do not do home equity lines of credit here. We will only do a home equity line of credit if it's doing it for a purchase as a secondary mortgage for loan to value reasons. But as far as a cash out option, that's solid. It doesn't change as long as you go into a fixed rate. You know exactly what your payments are going to be. You know how much cash you're going to be able to receive. With a HELOC, there's a lot of variables that go into a home equity line of credit. Some home equity lines of credit are interest only, and they're always interest only. So if you don't make the extra payments that go into the principal of that loan, you'll still have that balance. If you just pay the interest only part, you'll still have that balance all the way to the end, and that can be real problematic for some people. So I'm usually always of the opinion, you're going to do a cash out loan, do a cash out refinance if it makes sense. Interest rate, saving money, let's figure out what you're doing. What are you using the money for? But as far as time frames, that all depends on market, when you purchase the house, how many mortgage payments have you made, and the equity, and can you get anything out? Have you reached that 80% loan to value where you can actually pull money out? Because remember, you also have closing costs, prepaids and stuff too when you go into a new mortgage that have to be paid. And usually you want to roll those in, but that eats up some of the equity.
Okay. We have somebody else, but a question on that question. The question is, I purchased my home in a new subdivision. Now that all the subdivision is completed, my property value has gone up significantly, as have my property taxes. So at this point, I have about $112,000 worth of equity. And I've only been in my home for 2.5 years. Would that still allow me to do a cash out refi to make some improvements to finish my basement?
I wish I could answer that question, but the problem is I don't know how much you owe on your mortgage comparatively how much it's worth. So that 112,000 may be right at that 80% loan to value of the max that you can borrow. So that would be, give that person my phone number and call me, and I can run through that particular scenario pretty quickly. Just make sure you have your mortgage statement available, so that we can go over, hey, here's what you can borrow, here's what you have available. If it's only 20,000, is that going to make sense? Is that going to help you do what you want? Maybe, maybe not. If it's 80,000 or 50,000, then is that going to help you do what you want? I just can't answer those questions till I see those numbers. Probably, but there's too many variables that I'd really need to talk with that individual to see what it is. But as far as the time frame, you've been there 2.5 years. That yeah makes no difference at all. You're good.
Okay. All righty. So we have, for some people that came on late, they missed my daughter's statement, her video. So she sent this in. She said, "My name is Jason Riggins McGee. I bought my home when I was 20 years old and in college. I never rented, so I can't speak to that. But my friends that do rent pay almost 4 times what I pay in rent, in rent. And I think she meant in my mortgage, because if you saw the video, she said her mortgage is not even $700. The reason that I bought my home is because I don't like wasting my money. I saw rent as paying more for having less, and I was paying someone else's mortgage plus a little extra on top of that." So that is the homeowner that did the video earlier in our presentation.
And I'll give you one more bit of advice on that. Save your money. Save as much money as you can. Put your money away so that you have the money to put down for a down payment. Yes, there are down payment assistance programs out there, but they come with their own drawbacks. So if you can, save your money.
I'm trying to go back. It's not letting me go back. Oh, there we go. So there you are. So this is how to reach Eric, the guru of everything mortgage. At least that's what I say.
I appreciate that, Nikki. But yeah, if anyone has any questions, hey, just call me. We'll have a conversation. We don't need to pull credit. We don't need to get into super details of your overall situation, but I'll be more than happy to answer any questions you have so that you have a better understanding of what it's going to take to get you into a home.
Okay, good deal. So we have one other question.
Sure.
How old do you have to be to purchase a home?
Contract law, 18 years old, at least in the state of Georgia.
Yeah, and I've never, that was something I actually could have answered, but yeah. You have to be at least 18 to enter a contract and to purchase a home. From everything that I've on my side of the world, also for me to even sign a contract to represent somebody as a realtor, they have to be at least 18. So it's the same for my side too. How long does a person need to be on their job to purchase a home?
Good question. That really depends on, that's a long question. So depending on the program, VA considers stable income 12 months on job. It's not said that you can't get a loan, but they consider 12 months on job stable. FHA, they want to see a 2-year job history. And that's with most applications. They want to see a 2-year job history. If you've got a 6-month gap for FHA, then you've got to be on your job for 6 months before they'll even look at your income. If it's less than 6 months, doesn't matter. You can change jobs for the most part, doesn't make a difference. Conventional, they're a lot more lenient. So as far as the job is considered, we want a 2-year work history, even if it's college transcripts, as long as you can prove you've been doing that for 2 years before you started your job. That's more or less what they're really looking for. The job, how long do you need to be on the job? I mean, that also depends on how you're paid. If you're paid 1099, that's considered self-employed, which means we're really going to ask for, in most cases, ask for 2 years worth of tax returns to see what you wrote off on your taxes from that 1099 income. Your W-2'd, easiest way of getting income kind of verified and done is W-2 salary. It's the same every pay stub. Taxes are already taken out. We need 30 days worth of stubs to make sure you're on the job and it's stable. Income coming in for conventional and you're good to go. So just depends on the situation.
Okay. This one I probably can answer, but I'm gonna let you answer it.
Okay.
How much of a down payment does a single person need to have to purchase a home?
Oh, the down payment myths. Okay. So go ahead and get it out your head. I need 20% down to buy a home. No, you don't. Minimum down payments for conventional for first-time home buyers are 3%. Just 3. If you've owned a home within three years, then it's 5. With FHA, it's 3.5%. VA, if you're coming out of the military, you've got a certificate of eligibility, it's 0. USDA, which is the rural type loan, more of a out in the country type thing, 0. So it's not nearly as much as most people think.
Okay. Yeah, that somebody said I was told it was 15.
Nope. Nope, not when you're buying a primary residence. If you're buying a secondary home, the minimum down payment's 10%. If you're buying a investment property, 15% is minimum. But in today's market, you're really going to want to come up with 20 or 25%. Investment
Right.
property, second home, not
Okay.
primary.
Right. But we're talking about primary today.
Primary home you're living in.
Yeah, we are talking about homes that you are living in the home, whether it be a duplex, triplex, or quadplex.
Some
If
of
you're living
those
in the home,
can have, if you're going into multi-units though, that's where we got to figure out where those guidelines lie, because sometimes they require some more of a down payment.
right?
Yeah.
But that is a conversation that they need to have
Yes.
with you if that is what they want to do. So if they say, "Hey, I want to buy a duplex for my first home,"
Okay.
either way it goes, you still need to call Eric
Yes.
and have that conversation, so he can give you what you're going to expect moving forward.
Figure out what loan program is going to be best for you.
Mhm. Yeah. All righty. It doesn't look like we have any other questions.
That was a lot of questions tonight.
There was a lot of questions.
Wow. Good questions too.
Yeah, those are some doozies. All right. So if they need to reach you, they should give you a call at 404-503-8623 or email you at Eric, eric.driver@southeastmortgage.com. If you need to reach me, you can shoot me an email at nicole.riggins@exprealty.com. Or you can give me a call if you're on this. You have my number already anyway, so you already know how to reach me. And if you don't, just shoot me an email and I'll get you going. Anything else we need to add, Eric?
Nope. Not that I can think of. I mean, there's I could go on for hours. I really could, but I don't want to bore anyone. So if you do have a question, whatnot, just give me a call. We'll have, like I keep saying, let's have a conversation. That's all. Let's have a conversation. See what's going on. Maybe it's right for you at the right time. Maybe it's not. Everyone can buy. You may just not be able to buy right now, but let's figure out how you can buy.
Correct. All righty. We had a comment that said this was great information. Thank you.
Not a problem. That's what I'm here for.
Yeah. All righty. So we have one more of these on the list.
Yeah. Let me see what the next one is.
Investing.
Real estate investing is possible for me.
So that'll
be an interesting one.
That will be an interesting one. And the short version, I just want everybody, anytime you buy a home, you really are investing. You're investing into yourself. So even if it's your primary residence, you're investing into yourself. So that conversation is not just, I want to be a real estate tycoon and have all these investment properties. It's just making sure that conversation, as Eric is going to make sure and tell you, how to make sure that you have the best loan product for what you want to purchase and everything else. So that'll be good. All righty. Well, thank you, Eric, for joining us again
My
for this
pleasure.
wonderful Mortgage Monday. Eric has been with us every step of the way to make sure that we are getting the best bang for our buck. And we know the information. And so before you give me a call and say, hey, I'm ready to buy a house, and I say, did you talk to Eric? Do you have a pre-qual letter?
Call me.
So before you even worry about getting a pre-qual letter, give Eric a call so he can find out what you got going on and see if now is the right time to purchase, or if maybe 6 months to a year is a better time for you to purchase. So it's all a possibility.
Let's get out of the rent game.
Getting out of the rent game, as my daughter called it, throwing away money and paying somebody else's mortgage.
Building someone else's wealth, equity, and asset.
Yes. All righty. Well, thank you all for joining us this evening. You have a great evening, and we will see you next week.